Patrik Schowitz joins me now. Patrik, thanks for coming in. Well, let's go through it. I mean, that's the positive picture that you're painting at the moment. And where are you seeing this positivity particularly?
Well, really, across the board, I think investors are positive. This is the most bullish survey that we've had for a number of years. Investors are expecting an economic recovery, they're expecting a profit recovery, and crucially, they're not worried about interest rates.
And this risk factor is just, well, people are getting more and more, less risk averse.
Well, I think that's the crucial change.
Yeah.
The optimism on the macro outlook, that's been around for a couple of months now, but the crucial difference this month is risk appetite has picked up. People are actually having the conviction to put their money where their convictions are, where they think the economy is going. So you're seeing big overweights in equities, and you're seeing the lowest allocation to cash in 8 years.
Yeah, and then when you look at it, and people just liking risk once more, it's going into all sorts of asset classes which were deemed previously as being, well, too risky.
Well, that's another interesting aspect. I mean, that could be taken as a hint that investors are close to being all in. They're now looking at things that have lagged behind. So they're buying into some sectors that they haven't liked. So the underweight in banks at the global level has gone back.
For some, this is actually the alarm bells ringing, I would have thought, too.
Well, I'm sure some of the contrarians at this point, will be sitting up, taking notes and saying, how much more positive can things get? Now, the survey doesn't tell you necessarily that this is as bullish as it can get, but it certainly does raise the risk of a correction in the next few months, but then we would still be buying the market on any corrections.
Right. One thing, people getting back into Japanese equities as well. Now, we've been here before, haven't we, Patrik?
Sure. But I think it fits into the same theme as the banks theme. If you were coming into the market fresh after the new year and you're looking which areas have lagged the market, Japan is an obvious point. It's a cyclical market. Usually at this stage it should have already performed, and it hasn't. So you can see the logic behind that. But I think you could read it the other way and say, well, if people are resorting to buying these sorts of things, maybe there's a contrarian point here.
Let's take a look at some of the different industry groups now. I mean, we saw the run-up that we had for banks last year. Are we still seeing people thinking that these banks are still going to be able to outperform?
Well, actually, no. Investors are underweight banks, and I think that's one of the interesting things. They are overweight most cyclical areas of the market, but not banks. And that goes for global, that goes for Europe. So I think there could be a catch-up trade if you're bullish on the market.
And there's still a strong belief about emerging markets here. So how does that translate into some of these mining groups, some of these basic resource stocks?
Well, investors are still overweight. They still like that story. And if you look at emerging markets, the confidence in emerging markets is absolutely unshaken. That regional overweight into emerging market equities, that is still their biggest overweight.
But you use this big broad brush EMs. What about within the emerging markets here?
Within emerging markets, actually, that's not really my area looking at that.
So you didn't drill down that far in the survey, but let's just drill down somewhere else and have a look at the European strategy that you employ as well, and how does that sit with the survey that you have?
Well, the interesting thing you find in European equities this month is you look at the sector allocation. Nominally, that is actually quite pro-growth, pro-cyclical. Investors actually only overweight 6 sectors, and out of those 4 are industrial or resources. So that's oil, basic resources, industrials and chemicals. So on the face of it, they overweight those, only overweight 1 defensive, which is healthcare. You could read that as quite bullish, but you look at the size of the positions that people are taking, those are really still quite small. So it's more paying lip service to that bullish view, but they're not really committing the amount of money to it. So I think actually there's more to go for here on the pro-cyclical trade.